We've had an interesting selection of surveys from the UK and the Euro area this morning, which have continued a trend which actually started over the last couple of months of a potential recovery. You can see here, for example, especially in the manufacturing sector, we've come from a very low base, but you can see the German manufacturing number came out at 42.3. That was up from 40.8 previously. The overall Eurozone manufacturing survey rose to 43.8 from 43.1 previously. And in the UK, 46.7 from 44.8 previously. So, like I say, a very low base starting with, and there's still a lot more progress that needs to be made. Remember that 50 point is the area that separates contraction from growth. So, we're still far away from growth at this stage, but this is a big improvement. And more encouraging is probably the services components of this, the UK in particular, which rose to 50.5 up from 49.5. And the reason why it's so much more important is that this makes up the bulk of the economy, particularly for the UK and to a lesser extent the rest of the euro area. In the UK, it accounts for more than 3/4 of the entire UK economy. So when we see that go into growth territory, that is a big positive, and it is consistent with the UK actually potentially avoiding a recession. And that's why these surveys are important. That said, they are still just surveys. There's no guarantees that it will turn into the hard data that shows that the UK has avoided a recession or that the household activity and business activity has been strong, but it does tend to give us a pretty strong indication. So when these do move into growth territory, that is a promising sign, especially after such a protracted and significant downturn in the case of the manufacturing PMI. But what does this all mean for the charts? Well, we've got a euro sterling chart to look at here. And as you can see, this has been trending higher for quite some time, but it has run into a lot of difficulty around that resistance zone, around 87.20 through 87.70. That has been a big resistance zone for this currency pair for the last few weeks. And actually, if we look back on the chart, you can see that prior to this, in the earlier parts of the year, it was actually a major zone of support as well. And perhaps that's why traders are paying so much attention to it. But it has started to stall around those levels, and that's really interesting from a technical perspective. But also, if we look at the 200 233 day simple moving average, this is the red simple moving average band here, you can see that the pair is still trading above here at this point in time. So technically we are in bullish territory, even if we are stalling at that resistance zone. The other thing to highlight on the daily chart here is the momentum indicators at the bottom. The first one is the stochastic, and you can see that we have made lower highs over the last month or so, while price has been gradually making higher highs. And the same is true of the MACD below that. The moving averages have been pointing lower, as has the MACD histogram. So this divergence does signal a weakening of the trend, not necessarily reversal indicator per se, but a weakening of the trend, which makes those rallies that much more challenging. And the fact that it's occurred just after the breakout of that 200 233 day simple moving average band, I think is really interesting, because it means that we're now in a very confined zone of technical support and resistance, a break of which in either direction could send a strong signal about where we could potentially go next. But what's interesting also, if we go to the 4-hour chart, is that we've seen a pullback. Now, there's a few things actually on this 4-hour chart. Some are very imperfect, which is why which I'll highlight first. That is this formation here. This is the formation that's come over the course of the last couple of weeks, while the pair has been peaking, while it's been struggling to break through that zone of resistance. This is incredibly imperfect, but it just highlights what we are seeing form here. So I'm drawing a head and shoulders pattern on here, but you can see based on my drawing how imperfect it is. That right shoulder is significantly smaller than the left shoulder, but the neckline is clear. So I'm going to pay more attention to that than the head and shoulders, but sometimes it's just useful to point out those formations as they are being built, as it were. But you can see that level of support around 86.95, so call it 87. So this could be a really interesting level of technical support for now. So there are a number of occasions on this chart where the 200 233 period simple moving average band has proven to be a crucial area of support. The ones that really stand out, there's two occasions here back in October. There's an occasion here as well, just a week or so ago in November. And then here, just in the last couple of days too. So here's areas where this 200-233 day simple moving average band has been a crucial area of support. And even though we traded below here just today, it has rebounded and the candle has closed above. So that's not a full breakout yet. Now, obviously, there's one area that stands out that is slightly different than that, and that is this point here. Now, we did break below here briefly just a couple of weeks ago, but while that did happen, again, we were really struggling to see a close below the 200-233 period simple moving average band. So while the pair spent some time below that level, barring this very brief period here on the 3rd, the candles continue to close above. So that still looks like a very important area of potential technical support as far as I'm concerned. And the interesting thing about this is if we do break below and close below here, that could potentially give it some momentum to the downside. So that's one thing I'm going to be keeping a very close eye on over the course of the last couple of days, especially considering we are trading at such an important area of potential support and resistance, which could give us insight into whether we're going to break this sideways trend that the pair has traded in since May and move higher, or if we're going to see a continuation of that trade within, at which point you could even be looking at a larger double top here from the 17th of October with a potential neckline around the 6th of November. So a really interesting currency pair to be watching here over the course of the next couple of weeks, given how much it continues to struggle against that technical resistance. This is being recorded prior to the release of the ECB minutes, so it'll be interesting to see prior to this release whether that gives the pair a push in either direction. But ultimately, the technical levels still stand, and I think this is going to be a really interesting one to follow.